Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company. What a day, of course, markets responding to what we heard from US President Trump overnight in Davos, ruling out taking Greenland by force. We also had the jobs number absolutely blowing out past expectations and sending the Aussie to a 15-month high. Before we get into what the market did, though, there was some extraordinary comments coming through from the US President Donald Trump coming through overnight at his speech in Davos, basically saying Western Arctic allies could forge a new deal that satisfies his desire for a Golden Dome defense system and access to critical minerals. But really what has spurred market activity is the fact that he has ruled out taking Greenland by force.
All the United States is asking for is a place called Greenland, where we already had it as a trustee, but respectfully returned it back to Denmark not long ago after we defeated the Germans, the Japanese, the Italians, and others in World War II. We gave it back to them. We were a powerful force then, but we are a much more powerful force now.
The president went on to say that people in the Western world would be speaking German and Japanese if it were not for the US. US markets rose on Wednesday after the steepest sell-off in 3 months. So let's have a look at how our market fared. A very positive session, up 0.8%. A similar gain coming through on the S&P ASX 200, moving back after crossing below its 125-day moving average yesterday. A lot of focus on defence stocks. We'll get into that in a moment, but DroneShield was one of the best performers. And when you look at sectoral moves, apart from a bit of a fall coming through in the materials and some of those tech players, which of course rallied strongly in a couple of previous sessions, we are actually seeing 9 of the 11 sectors higher. Energy, the best performing sector. It was up 2.5% today and close to 3% over the past 5 days. All right, so our themes of the day really have been about the Davos detente, given what we saw with the president speaking overnight. Now, Men at Work, very clever title there from our producer Marius. We did actually see, in terms of that blowout jobs report coming through overnight, sorry, not overnight, it was this morning, 11:30 time, the unemployment rate falling to a 7-month low of 4.1%, 65,200 jobs created in a month, more than double the 30,000 that economists were looking for. And Men at Work, because the majority of them were actually men, something close to 70% of those jobs, and a lot of them full-time as well. Of course, in terms of the RBA's next move, a lot riding on the inflation data we're getting out next week. If price pressures remain sticky, the chances of a rate hike increasing, but the chance of a rate hike in February moved from 30% before the jobs data at 11:30 Sydney time to 53%, and there's now a 100% chance of a rate hike by May. AMP, we spoke to Mi Bui earlier, she's saying, look, no rate hike still, but NAB has a hike penciled in. I think they've actually got it in pen for both February and for May. And of course, ASX Ascent on that positive move coming through. Well, let's have a look at the sectoral moves. There was also a really interesting call or note out from Macquarie today on the banks. So having a look at where the banks have finished the session. CommBank there up by 2%. I'll just get you across that note that we saw from Macquarie as well. The analysts moving the banking sector to neutral, highlighting upside to earnings in 2026. We're going to hear from CBA in February. Macquarie seeing 1 to 4% potential upside to full year 26 earnings, driven by stronger volumes, higher margins amid rising interest rates. A quick look as well at gold, particularly as we did see gold come off some of those earlier highs, but of course it had been holding at 4,800. We've seen a little bit of coming back, a little bit of profit taking in some of these gold players. Northern Star down 8%, Evolution Mining down 4% today, and Newmont off by almost 5%. Consumer discretionary stocks too looking pretty solid. Lovisa there up by about 3%. And a quick look at defence stocks too. This is particularly on the back of this broker note from Bell Potter calling 2026 the year of the drone. They've increased DroneShield's target price by 13%, shares up 9% today. EOS also got an upgrade from Bell Potter, up by 6.3%. Elsewhere, Fortescue saying iron ore shipments rose 2% over the December quarter. Shares, though, did fall today. Santos rising, though, after its quarterly update. Northern Star saying production was hit over the December quarter. Its shares down 8%. Sandfire saying copper production slipped over the quarter. And South 32 at a 3-year high on stronger quarterly manganese output. Getting back to some of those defence stocks, Hyperion X there hitting a 3-month high on a US titanium contract. And Net Wealth had a record December quarter with total inflows of $8.5 billion. Shares, though, down 4%. Let's get all the details now with Mathan Somasundaram from Deep Data Analytics. What a speech, Mathan, from the US president.
Yeah, it's unique. Let's put it that way. I don't think I've ever heard. I actually watched it live. I stayed up to watch. I watched the first 5 minutes. I kind of got myself to watch another 5 minutes. I got to 10 minutes. I said, "Oh, forget it. I'll watch the replay later." It's it's an acquired taste.
It is an acquired taste. There were some interesting words coming through there, but nevertheless, we did see markets rise. Whether or not we're blowing past this geopolitical noise, whether it was the fact that he said he wasn't going to take Greenland by force, how did you sort of view the overall momentum that we saw filter through from global markets into our market today?
Yeah, it's kind of interesting because in the last few days, I mean, we've been outperforming US, which is kind of counter-cyclical because US has been outperforming everyone for a bit. But in context, when the market was running into this, we knew that there was going to be something coming out on the weekend, and then you had, nobody's even talking about the supposed 25% tariff on everyone trading with Iran. That's just been forgotten at this point. So we've actually got to a point where these tariff policies get thrown out left, right, and center, and the market's kind of starting to lose their effect. And the shock value is kind of gone. So when it came to the Greenland strategy, the whole idea was it was never sustainable. He was always going to taco it. And it was just a matter of how he walked back. So the most likely outcome was something like this, where they get a policy, they go, yeah, we got a deal of some sort where they don't have any details, and then they walk it back. And that's exactly what's happened. I mean, they don't really have anything. They've basically got their post that they already have, and they can have it indefinitely, which is what they already had. So nothing was achieved. You've kind of thrown it's almost like insider trading. You get to short, long in a couple of days, but we are where we are. Nothing has really changed. But the one thing that we have learned is with the current White House is that volatility is here to stay. So my guess is we're going to have either a tariff war with Canada coming up in the near term, or something in South America, probably targeting Cuba, that's going to happen out, because it's just a constant reality show. So it's going to be fun times for investors.
Well, a constant reality show, that does make it look like where you look for some opportunity, I guess. And Bell Potter coming through with this note saying the year of the drone, is that where you sort of see some opportunity as well?
We kind of went into defense a couple of years ago because we thought inevitably this was going to not go away. Defense stocks had a huge run last year. It's been one of the hidden gems last year, but now everyone knows about it. The drone technology is interesting because the Ukrainians lead that. I mean, pretty much if Ukraine did not have the drone tech upside, they probably would have lost the war by now. So that's their huge advantage. So yes, there's going to be defense spending. It's going to be tricky to work out who wins it in the end. Now the question is they went to a thematic where they were expecting Europeans to spend, and generally people don't spend on other country tech. When they spend on defense, they tend to spend it on their own country. So Americans, even though they talk about all this spending, about defense spending, it's all goes into the American companies. Same way when Europe spends it, majority of it goes into European companies. So is that going to help Australian defense companies? Probably not. I mean, just like Australia, when we spend on defense, generally that favors our company. So whenever we have defense spending going up in the local budget, then that's positive for our defense companies. I'm not really a believer that global wars are suddenly going to help our tech stocks. It's I mean, especially the war stocks. So Yeah, I think it's a tough stretch. I think they're still trying to prove themselves. It's going to be volatile the next couple of years, so enjoy the ride.
All right, well, where do you like? I mean, we're looking at commodity supercycle. We're looking at the fact that Macquarie is looking more favourably on the banks. What does Mathan like?
Yeah, I don't know what Macquarie is looking at. The banks have to deliver you double-digit growth to make this work, and banks are never going to do that. I mean, we're at an all-time high. We've got real financial stress, and the employment market is telling you the RBA's cannot cut rates, and the market needs rate cuts because we're sitting on asset bubbles. I mean, I don't care how you define it; it's an asset bubble in the markets and in property. So yeah, I'm not buying into the banks are cheap. I think CBA could lose another $50 before it becomes a normalized valuation. I'm staying away from the banks. I mean, gold stocks today are getting hammered, but at the end of the day, it's a question of currency devaluation. US has no plans to, even curtail their debt growth. So in that scenario, I think gold keeps going higher. And, our gold stocks, you don't have sovereign risk. You've got pretty good production. Yes, every so often you're going to get production issues. That's just part and parcel. But you've got a gold price in Aussie dollars, 7,000 plus, and you've got all-in sustainable cost for most of them around 2,000, 2,500. So there's this massive margin that they're all enjoying. So I've got no problems holding Aussie gold miners. We've been there for a long time, and we continue to be there. The one that I think for this year, I think it's energy. I think it's going to be energy. I think energy is going to move. And it's the most unloved sector. And if you look at oil, nobody wants to touch oil. If you look at gas, nobody wants to touch gas. But then you look at, what's happening in the US natural gas. Well, the gas prices in the last week have jumped 60%. So there's price movement there. Everyone knows tech demand for uranium is going to kick in. And in the meantime, they need to go to thermal coal because you need to keep the coal plants going. So all parts of energy are doing well. I think 2026 could be the year when energy stocks catches up with the rest of the commodities.
All right, it's going to be commodities and energy, and gold is what you like. Mathan, thank you so much. Have a great rest of your day. Mathan Somasundaram there from Deep Data Analytics. Getting back to the defence stocks, and remember Mathan said that he was sort of more in these a couple of years ago, but the stock of the day, which did very well, was Drone Shield. And Andrew spoke to our experts, Philip Pepe from Shaw & Partners, Howard Coleman from Team Invest, for their views.
Will it be the stock of the year? No. It was the stock of last year. It was up 300%. Is it going to do that? No. Often you don't buy last year's winners. They will lag. Sometimes, in fact, the story of last year with the lithium stocks is year before's losers were the winners of the following year. So I wouldn't call it the stock of 2026. It is a good stock. It ticks all the box in terms of the sweet spot, the tailwinds that are behind them, unfortunately, for obvious reasons.
It's in a good area. But they had 135 million shares 10 years ago. They've now got 872 million. That means they've raised money from shareholders time and time again over 10 years. And where's most of that money gone? It's gone into losing it in running their business badly and paying all the executives. So the founders who founded the company, they are effectively using their shareholders to fund a wonderful lifestyle for them.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAM. Retirement income done differently.
All right, let's get into some of the leaders on a very positive day for the local market. And of course, we've been talking about these defence players like Drone Shield up. Premier Investments also had a very solid day, up by some 10%. Miso Blast, A2 Milk and South 32 on that manganese update. Let's have a look at what we saw in the downside today. Pantoro, Vault Minerals, a lot of these gold players coming off with a little bit of profit taking there. Northern Star also having an update today. Regis was down 7.5%. In the small end of town, these companies did incredibly well, including Atomic Eagle, which was up by almost 28%, flying very close to the sun there. And the laggards in the small end of town include these stocks on your screen, including Hillgrove Resources, which was down 13.4%. Tonight, economic growth data in the US, also personal income and spending, and earnings, of course, continues with Alcoa, Intel, General Electric, Aerospace, Procter & Gamble. So quite a few companies there that will give us a big, broad view on the overall health of the US economy. Tomorrow, Friday, not much happens here, but we've got Kiwi inflation data and, of course, the Bank of Japan policy decision. And I did just want to point out that Japanese government bonds are extending this rebound after a steep sell-off. So market sentiment steadying somewhat after that extraordinary move that we saw in JGBs on Tuesday. Recapping where the local market is tracking as we close out, 0.8% higher there on the CBO 200, similar gains on the ASX 200, which has risen by 66 points, 0.8%, 8,848 points, and crossed back above its 125-day moving average. Over the last 5 days, though, we've virtually gone nowhere, and we're still about 3% off all-time highs. All right, we'll wait to see what the overnight session brings. Any more headlines from Davos? We'll see you from 9:45 a.m. Eastern tomorrow.